It is extremely difficult to buy a home in Canada right now, and that's why a lot of people rely on mom and dad to come in and help them with that first purchase. But if you are getting help from mom and dad, there are things that you and they need to know before entering into that transaction. This week on the Saskatchewan Real Estate Podcast, I'm joined by Scott Peckford, CEO of BRX, as we break down what you need to know about mom or dad helping you buy your first home.
This is the Saskatchewan Real Estate Podcast.
So today, Scott, wanted to have you on and talk about a really common thing right now. It's really tough for people to buy a home. And so in a lot of cases, mom and dad are helping out with the purchase of this property. So what we want to chat about today are the different ways that mom and dad can help their kids with the purchase of the property, and maybe some things that they should keep in mind when going through that process. So just give us an overview, Scott, of what that potentially looks like. Mom and dad are looking to help out on the purchase.
Okay, so obviously I've been in the mortgage business since 2006 and was an acting broker for a long time and seen plenty of mistakes that parents have made. And now my kids are getting up, they're teenagers, like just finished university. So this is stuff that I'm like, I got to pull out all those examples of like, oh, that went bad. And this is something I got to pay, not do. And so I think it'll be helpful if somebody is thinking about wanting to help out their kids, which is cool. And a lot of times people have to now, just given the housing prices have gone up so much. Even in Saskatchewan, the prices have gone up, if you compare to 20 years ago. And so you want to be wise about it. So I'd love to share some of the examples of things as thinking at it from a parent's perspective about because they don't often understand the risks or pros and cons of each of the different ways they can help. And so I'd love to break down some of that. And then, of course, we can talk about whatever. Hopefully this is useful for the potential parents or even kids that are going to end up getting help from parents.
Mortgages are kind of like insurance. It's really boring stuff, but it can get exciting for all the wrong reasons if you don't understand all the nuances involved with those things. So just start us off with maybe gifted down payment. This is a really common one that the parents are going to help out their kids when they're looking to buy a property.
Yeah, and so a gifted down payment is something that probably maybe 25% of parents, if they have the capability, not everybody can, but they have the capacity to help them out. And a couple of quick stories in that when my wife and I we had built our first house. It was built for us, which was crazy, and it was $265,000 for a house in Victoria, like BC, which now and it was $265K. It had a suite. And we had 15% down, and my wife came to me and said, "Hey, should we get some money from our parents?" And I was like, "No way, man." I'm like, I was too proud, but it literally would have if I would have put down an extra 5%, I would have actually saved the CMHC fees. And so there was but again, that's something to think about. So when you're gifting, one of the things you have to talk to a mortgage broker like yourself about is okay, if they have, because we had some money, if your money and their money together, can that get you a better rate? Can it get you save you insurance premium? And I'm not going to give a standard answer on this because frankly, it changes all the time. What's better? But the reality is that one of the questions you should be looking at is how does it affect the insurance premiums if there are them, and interest rates? Those are two things to think about. So I said no because I was too proud. I think my wife had done the math and it was going to save us I want to say $6 or $7 in insurance, which is was decent. I don't know what I was thinking. It was just stupid. Right now, I would be it was my kids would be don't be dumb. Let me help you with that, because then, so that was one area. The other thing about a gift is that another example of this is I had a client that I work with, and the parents were helping her out buy her first condo. Everything was great. They put down 20-25%. Great. And so everything was fine. She gets a boyfriend that is, maybe a little questionable. He moves in. Of course, the parents she's an adult, can't say anything about that. Nothing to do with that. But then he convinces her to go get a second mortgage on the property from a lender. I can't remember if it was Capital Direct or somebody that did these higher loan to value loans at high interest rates. So they rack up the money. Then he buggers off. Now she's got this property with a first mortgage on it, a second mortgage that she's stressing out to make the payments on, and the equity's been burned. So the gift that was given is now completely screwed up. And so this is the kind of things you need to think about. And obviously the solution is going to somewhat depend on the child. You kind of know your kid, and I have some kids I definitely would figure out some ways to protect my kid's interests. And other times maybe you wouldn't, but these are things that can happen that you don't realize until after the fact, that you're dang, there's probably some other way I might've been able to do this, or and in that case, if the parent was on title, so let's say the mom and the parents had, good income credit. If she would have gone on title in this scenario, they couldn't have got the second mortgage without her signature. So then when they went to apply for it, they would have been like, we can't give you this mortgage. And they would have been like, oh, shoot, mom, can I do a second mortgage? And mom would have been like, hell's no, you're not doing a second mortgage. And it would have killed the whole thing. And so it doesn't mean that you should go on title. Because again, this is a very, it's complex. And so I'm just giving you, examples of where things go wrong so that you just, for heaven's sakes, talk to somebody like Ron to get this sorted out. Because in that case, like if they would have been on title, that would have never happened. Would have protected her from this guy because she was sensible. So put it this way, the child was sensible, but sometimes love is not sensible or what we think is love. And then you end up making a whole bunch of bad decisions that the parents had to come in and clean up. And so there are, but then again, if you go on title, it can affect your ability to abort. So now if the parents were like, oh shoot, we wanted to buy a cottage and we wanted to finance some of it, it could have, so you have to do a whole, like, this is not something you just do lightly and go, yeah, no problem. You need to make sure you talk to somebody who's doing a full 360 of your situation to be like, what are your plans? Is this going to affect you? And if you have 3 kids, can you co-sign for all 3 of them? Like probably, maybe you can, but maybe you can't, right? Like, so that's the other thing to think about. If you're going to help out one kid, hopefully you're not the kind of parent who's going to help one kid and be like, screw the other kids. Like, like that wouldn't be good. But so there's kind of things you have to think about. So gifting is absolutely can be done. Lenders are totally fine with it. In most cases, again, this can change, but usually the money has to be in your account. 30, you can correct me if I'm wrong on this, Ron, because you're more up on about like 30 days before closing. They want to see the money in the child's account, like proof of the deposit. And sometimes if it's a large amount, they may even ask for where it came from the parent, which may seem like a weird thing to ask, but it's anti-money laundering. They want to make sure that it's like they're doing what they can to prevent, because there's proceeds of crime. They don't want that getting, because the people in crime love to put money into real estate because it's a great investment long term. They know this too, even when they're in crime. So anyway, that's what I would say first about gifting. I kind of went off on a tangent there, but gifting and thinking about holistically title and those other discussions you need to have.
I personally really like when we can have that money deposited during that condition period. That way, if there's any questions or if there's anything to be followed up on, there's still time when the person buying the property still has the chance to address it. So if we have that condition window of 5 to 10 days, if mom and dad are prepared at that time to transfer the money, we can have everything signed off in time for that condition deadline. You talked about going on co-signing, Scott, and the complexities that can arise from that. And I recently had a situation where I was kind of explaining this for a parent who was thinking of co-signing, and their initial reaction was, absolutely, anything that we need to do to help our kids. Because I think that's our gut reaction as parents, is that I will do anything to help my kids. But as you're accurately pointing out, it's much deeper than just, oh, I'll help out. There are the future considerations of, do I need to do this in the future for another child? Am I going to run into problems if I want to potentially buy a property in the future? And even now, even with this new news from the federal government of capital gains, if the property ends up getting sold and you're on title, do you need to have a conversation with your accountant about your name being on this property as well? So just walk us through some more of the scenarios, or do you have any personal stories of parents who've co-signed for kids on top of that?
Yeah, so like the one thing you reminded me of there is like sometimes when a parent would go on title, we would, for that very reason, is we'd make them a 1% owner. Now I'm not certain in Saskatchewan if that could be done, but I know in BC we would have a 99% owner of the child, and that one. So that's fine from a equity and a potential tax liability, but it still provides that protection of like, hey, they can't just like refinance the mortgage or add a second, third mortgage without some discussion with the parent. So that would be something to think about. But it does affect, you have to debt service the entire mortgage. So even though, let's say the child, you're only going on to cosign or you're going on title and maybe you don't even need your income. Maybe it's like the kids qualify, you want to go on title because you want to protect your child. But when you go to qualify for another property, let's say, or another child, they're going to assume you make that 100% of that payment, even though the child is making it, because it's not technically a rental. And you can't do it as a rental because the lenders are like, you're not likely going to evict your child. If the child wrote up a rental, like, they're like, this is bullcrap. You're not going to there's no way you're going to pull the plug on your kid, right? So like, so you'd basically be able to debt service that property plus the next one. So it's really important to think strategically and down the road about how you want to do this, in terms of like what would make sense for you as the parent, and the child, and keeping you, maybe you have other kids and you gotta think about that too, right? Sorry, we helped you, we can't help the rest of them. Like, oh dang, that's an awkward conversation at Thanksgiving. Yeah, the firstborn gets a property, the rest of you guys are screwed, like.
Wah, wah. I also see it more common with vehicle payments, but it's also
Oh my
something to
gosh,
keep in
yeah.
mind that as much as you trust your kids to do what they are supposed to do, a missed mortgage payment is a big deal in our industry. And if you have future plans of moving lenders or buying more properties, if you have a missed mortgage payment on your credit bureau, this reflects very negatively on you, even though it might not even be you who's missing these payments. So I think it's a real good conversation to have with your kids about their stage of life and how responsible they are in moving into this, and knowing that anything that happens that has your name on it, even though you're not getting the mortgage statement and the payment's not coming out of your account, it reflects on you.
100% does, yeah.
And so, just wrapping this up here, Scott, is there any other ways that a parent might potentially help out a child when they're going through the home purchase process?
Well, another way, that a couple other things that I've heard of people do, and then this is not meaning that everybody can do in every scenario, but I'll just throw some ideas at you. So I have a friend who he's pretty well off, and so the way he's helped his kids with is that he bought them, and this is you're gonna be like, wow, this guy's a 1%. Like he's got, but I think it's an interesting example of a parent trying to help out their kid. So he basically bought them properties, condos, and he, instead of making them make the mortgage payment, he makes them put money, I think 25% of their income in with his financial advisor. And it's like, and he has access to the financial advisor statements. And so because he's got he's a wealthy business guy, he's able to float the properties, but his kids now have real estate that they're owning, as well as they have investments growing. And I'm like, oh, that's kind of interesting, that of some kind of like, they're not just getting a free ride. Like, it would be very easy to just write them a check and be like, here's your free condo, like, good luck. But like, he actually has enough sense to be like, no, you have to put money into, and it's based on their income. So if they I thought that was an interesting idea that I'd heard recently. Another one that I think is good is if you've got kids, like, so my oldest right now is in university, and she's thinking about taking a year off. And if she does, she's going to pay board. She's not living for free with us. And so what we will do is charge her board, and that money we're just going to save it up. And at some point, if she stays with us, she's going to be paying somewhere. We would actually give that to her towards a purchase of a place as a gift at some point. But like, I may tell her that, I may not. So she's probably not going to listen to this podcast. But if she did, she'd be like, there you go. But we'd put the money towards helping them. It builds the discipline of a monthly. This kid who's making money and stuff, if they're not in school, then they can pay something, and then we would just set it aside, and it would be money that we'd help them out with, and that it can add up over 4 or 5 years, like, if depending on, hopefully she doesn't live with us that long, but you never know.
You never know. In today's market, I think you're making really good points, Scott. There's something psychological about, if you're earning something and you're working towards it, it means more, as opposed to it being just given to you. And I think this is more of a psychological thing than maybe even like a specific real estate conversation. But rather than just gifting your kids with no rules or guidelines around it, if you can build it around so that they're also learning a skill at the same time, that would be really great. And as you were talking, it also reminded me of some training I'm also taking right now, where it basically shows that instead of buying an RESP for your kids, you should be buying a rental property. And instead of using that money that would monthly go into the RESP, that's just the monthly cost that you would use to service the home equity line of credit for the down payment. So even long-term planning.
Yes, I love that. Okay, that's a great. Thank you for reminding me. That's a brilliant idea too. If you did buy, imagine if you talk to most people, if you, let's say, are our age and you've owned a property for 20 years, whatever. If you could own like, what would your situation look like if you could just own the house next door? You'd be like, oh man, that would have been a brilliant move. And so, real estate, given the immigration and I'm pro-immigration personally, like, I'm pro-immigration. So as long as it's not, I'm not, this is political, but I'm not pro-immigration if there's no screening of people and you don't know like what you're getting. But like in Canada, we're pretty careful about that. So like, I think we added like 1 million people last year to the country. Like, where is people going to live? So we may need to taper it for a little while, because frankly, right now, the number of people moving into the country, we can't like, this is why I don't think real estate's going to go down. because we cannot keep up with the demand, and we are increasing this, the potential buyers that are going to come into the market. And so it's going to push it up. So as a parent, I'm like, okay, if I can own a property, and instead of putting, and even if technically, again, this is going to sound crazy, but even if, say, the property didn't fully cash flow, and I had to cash flow it a few $100s a month or something, I could put the money into that or into an RESP. I'm going to go for the real estate, because the real estate is going to be like, because what if they decide not to go to school? What if they decide to, who knows what? Like, the real estate you can do anything with. You can't, the RESP has some limits on it. So again, I'm not a financial advisor. Please don't take this as financial advice. But I think that there is a case for, if you're able to do it, buying an investment property that you have for each child would make a lot of sense if you have the financial means to do it. And even if mathematically the cash flow was break even, or even cost you a little bit compared to what you'd get from an RESP, and you're going to be better off in most cases in the real estate. But
Right. And after school is done, you still potentially have this property, because the way it might potentially work for anyone who's kind of curious is you could buy the property, you hold it for a long period of time. When they're ready to go to school, you do a refinance on the property, pull the money out, pay for school, but you still have the asset. And so even after, let's say they become a doctor and they take 8 years of schooling, the house is still there after all of the schooling is done. Where if you saved up that same amount in education money, after education is done, the money's all spent, but you don't have the asset anymore.
they have an education, which is awesome, but they could have both. They could have an education, and you could have a property that you could assist in, helping them get their, and the other thing about those refinance money, there's no tax like this. That's not, there's not a, like, cause you're not selling it, but there isn't income tax on money that you take out of a refinance. Right. So like, yeah, there's interest costs, but there isn't, like, it's not like there's not a tax at the moment anyway. There would be when you eventually sell it on any gain, but yeah, so that's a good idea. I like that too. Yeah.
Thank you so much for giving us your insight on those, Scott. I did want to give you a little opportunity here to promote BRX, because I think it's a wonderful company. It's one of the reasons that I personally switched over. I was in a really good situation where I was, but the business model just fit me perfectly. So please just tell us a little bit more about BRX and what you guys are doing.
So yeah, man, it's been like, we started a brokerage 2.5 years ago, and I've said for years I would never start a brokerage, but here I am, and I'm having a blast. It's so much fun. I get to work with great people like you, and our team is awesome. And prior to starting the brokerage, I spent 5 or 6 years just basically coaching mortgage brokers on helping them build their business. And what I like about owning the brokerage is I get to do the same thing, but it's a different. I get to work with people longer term. I found that in coaching, I work with somebody a year or maybe two, and then they're like, okay, cool. Like, I'll give you an example. I was at a mortgage conference, and a guy came up to me, hey man, I want to shake your hand. I'm like, cool. And that was this guy, and he's like, I just want to let you know, when I started working with you, I was doing 25 million a year. Last year, I did 250 million. And like, and I was like, okay, first off, the student has passed the master, so you are now the master, my friend. Like, I never did 250 million when I was brokering. So I was like, kudos to you. So he said, can I do a picture with you? I'm like, sure, man. We did a picture, and then he left. And then I had a friend with me, and I said, the interesting thing is that guy, over the course of however many years, he maybe spent $10,000 or $15,000 in coaching with me. That's cool. But if I had a brokerage, we could work together for the next decade. And so that was for me, the defining moment of like, this is exactly why the brokerage makes way more sense, because I love help. I love when brokers like yourself, start to help other clients. The more people I can help you impact more families, then that's like there's a multiplying effect that can happen, which I really like. And I think we have a unique model. We look at some other industries that are growing rapidly, and we're like, could that work here? So that's been helpful as well. Our business model is unique. And and the fact I love podcasts. I've been doing it for almost 10 years. Like, for mine is more geared towards mortgage brokers, but I love that part of it, and talking to interesting people. But like, I think what you're doing is great. And the fact that you're educating your clients, then I think this is also important as well for you, for anybody listening to this, like, because again, back to this parents' help, there's a lot of ways this can go wrong. Like, you can literally screw this up a dozen different ways. And the problem is that even if everything I told you today, if you listen to this in 6 months, the rules might change slightly, or there might be different nuance. And so the best thing to do is talk to somebody like Ron and be like, hey man, like, what's right now? What is the best option? Okay, here's what I would recommend. And also, it's always specific to the individual. Like, there isn't like one cookie cutter advice that works for everybody in every situation. It's like, well, it depends. Let me look at your situation, and then I can advise you on, what I would do if I were in your shoes, kind of thing.
If someone's interested in BRX, are there just general ways that they can get in contact with you, or what's the best way of reaching out?
Well, if you're on Instagram, you can follow me on there. You can send an email, scott@brxmortgage.com. If they're a mortgage person, they can talk to you. Like if they're in the mortgage business, you can always reach out to Ron and say, "Hey, Ron, what's the scoop with these guys?" I'd be happy to I'm sure you could give them some your insights on what we're up to. But yeah, I just think I think it's an amazing time to be a mortgage broker, and I think that we have because the complexity. When I started in 2006, it was not as complex as it is today. Like now, it is so much more complex, which means that for the average borrower, to them it may seem easy, but there's a lot of nuance, and there's 100 different ways things can go wrong, and cause you all kinds of stress if somebody's not planning for you and thinking ahead. So I think mortgage brokers are here to stay for sure.
One last question for you, Scott. I ask everyone who comes on, if you could go back to a younger version of yourself, what advice would you give and why?
Well, I think in the context of real estate, I would have been like, don't sell anything, dang it. Like, why the heck, like find some way to keep if there's any possible way to keep two properties or three or four of them going at a time. Like when I was younger, that would have been a very smart move for me. But I actually was risk averse when it came for some reason. I just had this like aversion to risk, not in business, because I'm like, I'm willing to try anything, but like in real estate, for some reason, which real estate is is pretty secure comparatively. And I just had this risk aversion to the payments, and I was like, I should have kept some of those. So that's what and I probably would have bought like Amazon stock and like, Apple. That would have been smart too.
Maybe a few thousand Bitcoin in 2006.
Yeah, maybe I'll although I'm not a crypto guy, but like, I maybe there would have been a time, but then I was like, how do you get your money out? That would have been even if you had all that money there now, like, how do you get it out? I don't know. Like, is it? And I don't. I'm not. I know some people that were making tons of money in crypto and then gone, like just vaporized.
There's someone who invests in crypto right now is like banging their computer screen. They're like, Scott, you got to use this platform. But I'm kind of with you. I don't really fully understand crypto.
I don't understand it, and people will make money on it, and more people will probably lose money. But I'm like, it's not a game that I want to play because I don't want to spend the time to learn it. Could I make money in it? Yeah, probably. I don't want to learn it. I like what I'm doing. I like being in business. I'd rather personally invest in myself and my business and make myself like learning. That's how it's my return on. I think Alex Hormozy calls it invest instead of the S&P 500. It really gets what's he call it? Uh, invest in me. I guess basically invest in myself, not instead of. And I like to do that. So.
Awesome. Scott, it's been awesome having you on the podcast. Like I said, surreal to chat with you, and we'll put this podcast out very soon. So a real pleasure. Thank you for what you've done for mortgage brokers over the podcasting journey. I know I relied on a lot of episodes and nuggets as I was going along there. So thank you so much, and thank you for being here today.
Yeah, thanks for having me, man.
Hey, thanks for checking out this episode of the Saskatchewan Real Estate Podcast. Hope you found some value here. If you did, please help us out by hitting the like and subscribe button. If you are currently in the process of buying that first home and you're looking for a little bit of guidance on the loan side, I am a fully licensed mortgage broker in Saskatchewan and would be happy to help you with that first purchase. Simply click on the link in the description of this episode. Until next week, I'm Ron Coroni, your Saskatchewan mortgage professional. Bye for now.